All right, folks, back to work. Well, pretty darn good day today. If you're here last night, we planned our trades last night. We came in and traded the plan today. Had a fantastic day in the trade room. Hope everyone had a fantastic money-making day as well. Now we have, FOMC tomorrow afternoon. We got big earnings tomorrow night after the close. And I've got like 3 stacked up ranges right now on the S&P and NASDAQ. One of those ranges appears to be perfect for a breakout pullback tomorrow. Now, breakout pullbacks, they come in lots of different shapes and sizes. I've got 3 different kind of variations of breakout pullbacks I always look for in these situations. So we're going to cover all 3 of those because you never know what you're going to get tomorrow. I want to make sure everyone has a roadmap, a game plan to make some money tomorrow as well. So charts ready to go here tonight. No time to waste. Let's go find some more winning trades and make some money on what should be another great day tomorrow. The S&P and SPY is already, as you can see here tonight. NASDAQ triple Qs are already. Boy, I have 4 clues right now on the charts in front of us that are kind of tipping us off to where I think the winning trades are waiting for tomorrow. One of those 4 clues is right here on the hourly chart. We have a V bottom in play right now on the S&P SPY, V bottom in play right now on the NASDAQ and the triple Qs. Now, why is that a big clue? Well, because, and we talk about this a lot on these videos, whenever something makes a V bottom, what happens is everybody tries to get in at the best possible price. In this case, buyers, we're an overall bull market right now. So buyers, you'll notice today, we're buying bear traps right below prior swings. Same thing on the NASDAQ, right? V bottom, kind of grinding higher here. And you can see, right, in these V bottom scenarios, what happens is everybody's trying to get in now at the lowest possible price. And so the 60-minute time frame says we're definitely still bullish overall. That big move down is not enough to call this a bearish reversal, at least not yet here. But right now it seems like buyers are going to do whatever they can to buy as low as they can, buy underneath swings. If we keep going higher here, we want to be looking for those entries below prior swings on both the S&P and the NASDAQ. That's one of 4 very important clues right now. Now, the second clue is over on the schedule for tomorrow. And that, of course, is we have the FOMC announcement at 2 o'clock Eastern time. Now, why is that a big clue for trades tomorrow? Well, oftentimes, not every time, but oftentimes, markets will begin to float higher into the FOMC announcement. That's one very common theme about an FOMC announcement. Markets they do tend to float higher into the FOMC. I'm not 100% sure if that will happen tomorrow's FOMC, but it's something I'm watching for tomorrow, and I may get a bit aggressive tomorrow before lunchtime if we do see this thing begin to float higher. It would also be good to mention, too, that with the big news tomorrow at 2 o'clock Eastern time, we want to get into trades as early as we can. The afternoon session's a little bit off limits for us tomorrow morning in our trade room. And then be aware too, tomorrow night we have 3 out of the 7 tech stocks, Tesla, Meta, Microsoft, reporting tomorrow night. We'll come back and talk about that more in tomorrow night because we got big back-to-back earnings here this week. But right now, the most important thing in the calendar is getting as early as we can. And again, if we start seeing it float higher, that'll be a big clue for me tomorrow morning. Let's get back to our charts though now. We've talked about 2 out of the 4 clues here for tomorrow. 2 more of those clues are not on the hourly chart. Let's drill down to some tick charts right now because, tick charts are fantastic for entries. Time charts, these hourly charts, they're good for the overall big picture, but they're not great for timing entries. I like to use tick charts because tick charts make the pattern recognition a whole lot easier. That is a 7,000 tick chart, all the time frames you'll need in the upper left-hand corner. And in case you are watching for the first time right now, welcome to my YouTube channel. That yellow line right there is the only indicator we need to find winning trades. It is the 21 EMA. Now, what were the 2 more clues here? Well, one clue was the big move higher. Now, of course, if you watched last night's video, we talked about a slingshot reversal in last night's video. It was almost as if the markets listened to the game plan last night and did exactly as we described today. I get so many great emails. Of course, members doing great with us in the morning trade room. That slingshot reversal off of that low. If you watched last night's video, hopefully you paid attention because it just teed that thing up for us. One of our biggest winning days in the trade room in quite a while. Fantastic session. Well, that slingshot, as I told you last night, they tend to get pretty aggressive. And so now they've made this big move going higher. Now, big moves, I don't want to buy high. I want to buy low. Whenever I see a big move like this, I tend to look for a two-legged pullback and a retest of that recent high. That will allow me to kind of quote unquote buy low, if you will, right? So two-legged pullback, and that leads me into the final clue here, which is multiple trading ranges. Range. Now, why is that important? Well, the most recent range becomes a magnet. Again, if you watched last night's video, when markets pop up into a range like this, it anchors this market higher. It's an anchor, right? It's a magnet. Ranges are magnets. That's very important. Also, too, the previous ranges are now perfect for breakout pullbacks, right? Now, think about that hourly chart. Remember what I said earlier. On the hourly chart, we want to try to get underneath prior swings, right? So think about this tick chart right now. And which one of these ranges do you think is the best to get? Yeah, that swing right there is begging to get bought because now it lines up right around that trading range. It's a breakout pullback, perfect spot for a bear trap. Now, I have three different variations of like a breakout pullback. Let's talk about those right now. And then later on in this lesson tonight, I want to talk about if we keep floating higher, right? Because again, tomorrow is an FOMC announcement day, and we may keep floating higher to try to fill that gap up there, of course, left open over the weekend from the old deep seek. Okay, so let's talk about, first of all, those breakout pullbacks. My favorite trade for tomorrow would be a two-legged pullback. Now, when I say two-legged pullback, think about a measured move, right? A measured move, A, B, C, D. I would love to get this thing down around the low of that 60 quarter, that channel you can see right here. Okay, so I love the idea of that area right there. The challenge, of course, is I'm not going to pick a bottom on this, right? I don't have a crystal ball. It may go a bit further. I don't know how far that pullback will go. What I do know is that once it pulls back with all of this bullish momentum and that range anchoring this market higher, this becomes a horrible place to be a seller. If it's a bad place to be a seller, it's a great place for what I call a two-try failure pattern. What does that mean? Well, we saw a beautiful one right there. We pull back. I'm going to wait for the bears to try once, higher high, try twice. Now think about this. When those sellers, and we called this one this morning in the trade room, what a fantastic way to finish the morning. What happens when bears are trapped? If these bears pull back and try once, try twice, what happens now is all of their stops are just begging to get run. If you're stopped at a short trade, you buy your way out. These are called two-try failure patterns. All it is trapping the bears in and squeezing those stops. Now, where does the market want to go? It wants to go back up and take out that high. Now, if you want to make more money, add to your winners. This is how I like to add to my winning trades. I look for a nice strong pop higher. I look for a shallow pullback. It'll barely miss the moving average. You'll get that higher high in price, and that is where you want to add to your winners, right? Target comes off at the retest the high, leave a runner. We'll see how far that will go tomorrow afternoon. A failure into a trap combination. Look at this one right here. We break down, bears once, bears twice. There's your failure. Now look right here, right? Look right there. Look right there. You see what's happening right there? We go up, shallow pullback, higher high. Remember, the shallow pullback is the giveaway. Everybody wants to buy right below that low. So one of three different types of breakout pullbacks is that failure in a trap combination. Now, I want to talk about two more variations. Before we do that though, I know most folks watching right now, you know these patterns, you're making money with these already. But if you're here for the first time right now, this might be a way over your head, a new language, a new strategy. What are failures? What are traps? Don't you worry. I teach this entire system. In fact, I have a ton of examples, recent examples of failures, traps, two-legged pullbacks. Guys, I have so much more to share with you, and I'll cover more of this in our free video classes. What I'll do is put a link up top there for you, upper right-hand corner. Grab that link that popped up there. Take that free trading course, because the strategy I teach in that short video course will teach you a simple trick we use in our morning trade room that tells us literally exactly where the winning trades are going to be today. More importantly, I want to teach you how to time better entries, my 4 favorite entry setups. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries right now, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I include in that short video series. The best part is, it is 100% free for you. And keep in mind too, guys, I'm going to put all the important links you'll need to learn more details, all the setups I'm talking about. I'll put all those details in the description of the YouTube video. So if you're here for the first time, definitely check out that free video course. It'll make everything make sense. And also too, if you're on Twitter X, I post a ton of charts and videos and mindset stuff throughout the day. If you're on Twitter X, give me a follow. Again, my handle's down there. Again, you want to go in the description and get more information there, but definitely follow me on Twitter X, more updates during the trading day. So where did we leave off? Right, I talked about that two-legged pullback. Trap the bears in, squeeze stops. Trap the bears in, squeeze stops, add to your winners with that trap. Okay, now, sometimes we'll get that beautiful two-legged pullback, but we're not going to get a chance to trap the bears in, right, and squeeze stops back up again. Every once in a while, we get that nice deep two-legged pullback, but there are so many buyers waiting down here, it just whoop and runs right back up again. And we don't get the chance to get that bear trap down there. So what do you do in a V-bottom scenario? What you do is you wait for it to V-bottom. Unfortunately, in these scenarios, I don't get the entry that I want in that bear trap zone. But what most oftentimes happens is when it V-bottoms off that low, like we mentioned earlier on the hourly chart, everybody starts watching these prior swings, and we like to look for entries off that prior swing. If we're lucky, there'll be a channel coming in off the high, off that low, right? Like this could easily be the same game plan we look for on that hourly chart. Markets are fractals. The same pattern on the hourly chart can be applied here on the tick chart here, the 7,000 tick chart, a much faster time frame. So if all we get is a V bottom down here, the hardest part about these is not chasing after it. Your patience is usually rewarded on these. I'm going to grab that bear trap below that low. In all reality, guys, this could be any of the entry patterns. It could easily be a failure pattern like that. It could easily be any of the entry patterns you learn inside the free video course. That's one variation of that breakout pullback. And another variation, which is pretty common in our trade room, it is what we call the retest trade. So for example, we oftentimes see a nice, strong, deep two-legged pullback. We get our 1, 2, remember, higher highs in price, really, really important. Higher highs. Why higher highs? Because then we know stops are sitting there. Lower highs, no bueno, right? Higher highs, very, very good. So oftentimes we'll get that stop run. We'll get a nice 1-to-1 first target, right? We'll talk about trade management more in that free video course, but sometimes we'll hold kind of the underbelly of that first leg down and the market makes another strong leg going lower, right? These are not a reversal. Remember the hourly chart, right? We're very bullish right now with that V bottom off of that low. Oftentimes, these become measured moves. 1 leg, 2 leg, right there. So keep that in mind. The bottom line though is that anybody who sells on that pullback, when I get back to retest that low, all of those sellers become buyers down here because they're taking their profit targets, right, on the retest of that low. Now, let me tell you, or you tell me, right, is this a good place to sell short? No, right? This is the last place you want to sell short. If you want to sell short, sell as we're going higher. But well, I know for sure when I was a rookie, I was chasing these things all over the place. I was selling low pretty much every time I took a short trade. So I know for a fact, lots of rookies are going to fall for that bear trap right there. Now remember, I have no crystal ball. I don't know. It might be the low a day. It might be that measured move. I don't know how far it'll go. What I do know though is that once this thing pulls back to that 21 EMA, I'm going to do it again. Wait for one. Wait for two. Why two? Because I want those stops to squeeze those stops running higher. Remember, the goal now is to go back and take out that high right there and the big high up overhead. Knowing that on the way back to those areas, how do you add to your winners? It's always going to be one of those trap patterns, right? It's always going to be that strong pop up. That separation is the giveaway, that higher high in price, and that trap right below that low, right? Same thing over here now, higher high in price. Again, get that separation off that moving average, right? And that trap below that low. So 3 variations of a breakout pullback. You'll notice, right? It's all kind of looking for that 2-legged pullback going lower. V bottom, game plan for that, and a retest trade. These retest trades, right? These retest trades are oftentimes our biggest winners. So pay attention on those. It takes a little bit of patience on those, but the patience will usually pay off. Now, I got one more question for you. Then we'll go grab the NASDAQ, because NASDAQ's a little bit of a twist different than the S&P is right now, but I think you'll find a lot of similarities there between the two. What if we keep going higher here? Right now, we are in a trading range right now. And what do ranges do? Ranges, look at this range over here. What do ranges do? They rotate. This might be the biggest reason why, if you haven't taken my free video classes yet, you have to stop what you're doing, pause the video, join the free course, learn how ranges work. Once you learn how ranges work, everything gets so much easier. You trust me on that. You'll love that free video course. Everyone does. So on the range, when we go above the range, we rotate lower. It rotates back and forth, right? Okay, so now we go up into a range. This thing will want to rotate off of that low, right? How do you trade during that rotation? Well, what's the problem? The problem is I'm buying high. If you've taken my free video classes, you know what's the one pattern we use during rotation to avoid buying high. It's always going to be that bear trap pattern. Now, again, it'll roll higher, it'll separate off that moving average, and my goal will be to get in right below that low. And again, it'll try to rotate to the pendulum swing, right? The pendulum swing on the other side. If it does keep rotating higher here, knowing that tomorrow is FOMC, and they do tend to float higher quite often before the FOMC announcement, and that gap fill is just begging to hit up there, I will certainly leave a runner if I can get in on what we call a shallow pullback trap. All right. So if all we get is a little tiny move lower, then pop up, shallow pullback, buy as low as you can with a trap. Again, I would love to get a deep 2-legged pullback, right? That's my favorite. But you know me, I can't control the markets. I want to make sure the game plan, if we go half of that, right, and then pop up, it will always be in these scenarios, as we buy shallow pullbacks, it's always going to be that pattern right there, that pattern right there. All right. And again, measure the amount below, measure the amount above. That will tell you there where to leave your runner. If you want more money, get better at leaving your runner. And remember too, you can always string together a couple of these, right? So a bear trap right here. As we go higher, these are the same entry pattern, believe it or not, right? One is more of a reversal. The other is more of a continuation, right? Same right there, right? So this one here is a reversal version of it. It's the same pattern, right? Same pattern, but it's more of a reversal version, right? Into a continuation version, okay? Those are the keys going higher. And what I'm looking for here, if it does, again, if we don't get that deep 2-legged pullback, I mentioned earlier. All right, that is the game plan now on the S&P. Let's go transition now over to the NASDAQ, right? Because the NASDAQ, you'll notice, it's similar, but it is quite different. Now, before we dive into the NASDAQ, though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing. You know, YouTube rewards me every time you like, share, and subscribe on these videos. I know we're all busy people these days, and I appreciate you all spending a few minutes with me every evening here on these video lessons. So thank you so much. All the likes, subscribes, all the ongoing support. Now, let's get back to business and talk about the NASDAQ. The NASDAQ 60. Very similar here to the S&P, a V bottom. And anytime we see a V bottom, the number one priority now is buying as low as we can. We saw a great example of that this morning in our trade room. It was almost like the market was listening to us right from last night's video newsletter. And if we're lucky, we can draw a trend line, right? Get that channel. That would be fantastic, right? Trend line, channel, right? Get those traps going in, going higher here. The 60-minute time frame is pretty straightforward. Now, over on the tick chart right now, you're going to see right away here it's a little bit different than the S&P. Now, again, what a gorgeous, again, if you watched last night's video, you were ready for this one today, up into a range, rotates off the high, right? Easy bear trap off that low and slingshots running higher. And again, these rotational moves, these slingshot moves, as we called them last night on the video, they oftentimes put some huge punch in the market. And now we have this big move going higher. Anytime I see a big move going higher, I don't want to buy high up here if I can avoid it. I'd like to wait to buy a nice deep two-legged pullback. Think about that measured move. My favorite measured moves, or my favorite two-legged pullbacks, go a little bit more than a measured move. And again, you can see right here, right? Range, range, range. Remember, on the hourly chart, I do want to buy below these prior swings, which means that range right there and that whole area below 387, what is that, 15 or so, right? That is the best spot I can find right now, my favorite spot here to be a buyer. Now, I mentioned earlier that ranges love to rotate, right? So we may only get a shallow pullback, right? This is one difference between the S&P and the NASDAQ. We may roll over. And remember, I'd like to get that nice deep two-legged pullback and use one of those three different types of breakout pullbacks, right? The V bottom, the bear trap, the failure, right? The retest trade. We mentioned those earlier on the S&P. We also talked about earlier on the S&P too is if all we get is a shallow pullback, what is the one pattern we look for if we don't get that deep pullback? It's always going to be a bear trap, a technical bear trap. And if you don't understand the difference between a bear trap and a failure pattern, what are you waiting for? Pause the video, take the free video course. You will learn that in only like a couple hours, right? It's so easy to learn. Bottom line is that is the pattern we're looking for as we rotate back and forth. All right. Now let's talk about if we go higher here, because again, they love to grind higher into the FOMC. So the bottom line is if we keep floating higher here, the gap fill, of course, on the S&P we mentioned earlier, the NASDAQ gap is up there as well. And remember, that is last Friday's close. All right. That's all that is. It's one of the only indicators I use on this chart. It is the closing price of last week. I don't have the whole open, high, low, close levels because for the most part, open, who cares? High, low, who cares? The prior week close, right? Last Friday's close is usually a magnet, especially when you had that big rundown off the deep seek. Okay, so if we run higher here, this will be a range breakout, right? It'll be a range breakout. There are two basic ways to trade a range breakout. Are you ready? Very important right now. First one is if we get that separation going higher, it's going to be bear traps, right? And I know I sound like a broken record, but welcome to trading, guys. If you want variety, trading is not your game. Yes, every day is different, but we always use the same tools and techniques, because once you find what works, you keep on working it, right? So remember, trading is repetition. Trading is repetition. I'm not going to try to make up different entry patterns, right? Just to keep things exciting here on the YouTube videos. Hope that makes sense. So as we're going higher here, right, it's always going to be, remember, the key here is that separation. The separation, I cannot overemphasize that pattern, right? It goes up, shallow pullback, higher high, separation. No doubt everyone buys off the area, right? The separation is so important, because separation equals strength. Now, at this point, remember, whenever we have a range breakout, the breakout leg is a measuring leg, okay? If you want to make more money, learn to hold your trades longer. Once you learn how ranges work, everything gets so much easier. The breakout leg is the measuring leg. That will tell you where our targets are, okay? Where our targets are. I will leave a runner for that gap fill, but the bulk of it comes off at that measured move. Now, once I get that measured move taken off, now we start looking left now and go, okay, how can I use this range now for a breakout pullback, right? Breakout pullback. Now, when I think of a breakout pullback, the first thing I think of is a two-legged pullback, right? And that means getting underneath that moving average, one leg, two leg, thinking about a measured move. Ideally, it'll be somewhere right around those prior highs over there, right? Somewhere around there. Again, I'm not going to blindly buy that area, right? That's for rookies. We don't blindly buy areas. We look for bear traps, right? We look for the bears to pull back. 1, 2, we trap the bears in. Now look, this is a technical trap pattern, right? If you look up trap pattern in the trading dictionary, right? That is a technical trap pattern. It's very well known for a century or so, right? Very popular in price action trading. This pattern is something I stumbled into many years ago. I call these failure patterns. It's kind of a bear trap, but again, I call them failures. It's basically a failed continuation. It's a failed reversal, right? Makes sense? So if we can trap in those bears, 1, 2, with a failure pattern, now we run their stops, and the goal, of course, is to go back up and take out that high. Now, how we add to our winners is always the same. It's another technical bear trap, a technical bear trap, right? And again, I say that because, again, look it up in the price action trading dictionary. You'll see that is what a technical bear trap looks like. Separation, higher high, etc., etc. That's a classic breakout pullback, right? Breakout up, measured move, two-legged pullback, buy the bounce, right off the top of that trading range. Every once in a while, we'll pop up of a range and grind like this. Remember, if it grinds like this, draw that trend line, right? Find that channel, look left, find some prior swings, get underneath those prior swings, right? If it grinds up like that, draw that trend line off the highs, bring it down around recent lows, and don't miss that first test is the best test. And then one final variation I'll share with you guys here tonight is if we do pop up into a new trading range. Hopefully by now you know how this works. If we pop to a range here, remember that range is a magnet. Previous ranges are breakout pullbacks. I want to run lower, trap those bears in with a failure pattern. And where does it want to go? It wants to finish off that rotation going higher. Again, this is the same setup we saw this morning, the trade room, right? The amount below, the amount above. So the key is if we do end up chopping around, going sideways up there, right? We now know I want to get below that trading range. Ideally, use the previous range as a breakout pullback, right? Failure into bear trap combo and leave that runner with that pendulum swing going higher. All right, guys, I know I covered a lot tonight on this video. The free video class will make it a whole lot easier for you to learn the terminology. And remember, tomorrow morning, the place to be is in my trade room, 8 o'clock Eastern time. The easiest way to make money in these wild markets is to come out and do it with me every morning at the opening bell. I'm going to put all the important links in the description of the YouTube video. Start first with the free video classes. Enjoy all the trade examples I share. Then come join us in the morning trade room, and we'll do it together every morning at the opening bell. In the meantime, Great job today. Let's keep it rolling tomorrow. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.